Global stocks mixed, all eyes on trade and yuan. Asian stocks traded mixed on Wednesday as investors kept a close eye on the Chinese yuan amid an escalating U.S.-China trade war. The People's Bank of China set the official midpoint reference for the yuan at 6.9996 per dollar, which was slightly weaker than market expectations. Earlier in the week, the yuan broke a closely watched level of 7 against the dollar, sending markets across the globe into a frenzy and leading the U.S. Treasury Department to label China as a currency manipulator. As such, the MSCI Asia ex-Japan Index was lower by 0.05%. The Shanghai Composite shed 0.32% to about 2,768.68. The Japanese benchmark Nikkei 225 slipped 0.33% to close at 20,516.56. South Korea's Kospi closed 0.41% lower at 1,909.71. Over in Australia, the S&P ASX 200 ended its trading day 0.64% higher at 6,519.50. In Hong Kong, the Hang Seng Index fell 0.14%. In individual stocks, SoftBank Group shares slid 0.23%. After market close, the Japanese company reported its quarterly operating income for the second quarter. The income fell 3.7% year-on-year to 688.8 billion yen, but it still beat expectations. European stocks closed in positive territory on Wednesday, despite tumbling bond yields stoking concerns about a global economic slowdown. The Pan-European Stock 600 was 0.2% higher at the closing bell, with most sectors and all major bourses in positive territory. German bond yields hit record lows, while U.S. Treasury yields plunged as investors moved back to safe haven assets following more rate cuts from central banks in New Zealand, Thailand, and India. The banking sector was in focus as the European banking index hit a one-year low. Commerzbank posted a net second quarter profit of 271 million euros, which was little changed from the same period a year ago. The German lender share slid 6.4%. Stocks on Wall Street dropped on Wednesday and then recovered, ending the day nearly flat. The early slide briefly pulled the Dow Jones Industrial Average down more than 580 points, but a late in the session rally erased nearly all those losses. The Standard & Poor's S&P 500 index gained 2.21 points, or 0.1% to 2,883.98. The Dow ended down 22.45 points, or 0.1% at 26,007.07. The Nasdaq climbed 29.56 points, or 0.4% to 7,862.83. In individual stocks, Walt Disney Company dropped 5% after its quarterly earnings missed forecast on higher investments in its streaming platform. CVS Health Corp climbed 5.7% after the drugstore raised its full-year profit forecast. Meanwhile, the moves in the bond and commodity markets continue to signal that investors are nervous about the escalating U.S.-China trade war that may derail the global economy. On the data front, German industrial production has suffered its biggest annual decline in 9 years after the escalating trade war between the U.S. and China took its toll on exports. Production was down 1.5% compared with the previous month. That followed by a 2% decline in April and a 0.1% gain in May. Economists had forecast a more modest 0.6% drop in June. Second quarter economic growth figures are due on August 14th. In currency markets, the dollar was mixed amid contradictory signals and nervous sentiment among traders. The euro-US dollar briefly jumped to 1.1240, but failed to confirm a break above the 100 DMA and finished flat. The pound sterling US dollar closed a little lower, but in general this week the pair has been trading at in a rather limited range, with volatility ebbed. In commodities, Brent crude plunged to 7-month lows below $56 and closed at $57.34, with rather heavy losses. The Energy Information Administration reported a 2.4 million barrel build in crude oil inventories for the week to August 2nd, shattering expectations of another sizable draw. Analysts had expected a draw of 3.13 million barrels after last week. The authorities reported a hefty 8.5 million barrel decline in inventories. A day earlier, the American Petroleum Institute reported another weekly decline in oil inventories of 3.4 million barrels. The EIA also reported an increase in gasoline inventories, which will not help prices either. After a 1.8 million barrel decline for the week to July 26th, last week they added 4.4 million barrels. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.